I am a follower of Jesus Christ. I have an opinion and I share it with you. I am the salt of the earth. Hello, everyone. Welcome back to the Salt of the Earth podcast. Today, we've got a wild story to unpack. Elon Musk has just sold X, the social media platform formerly known as Twitter, to his own artificial intelligence company, XAI, in a $33 billion all-stock deal. This happened on March 28, 2025, just a couple days ago as I'm recording this on March 30th. If your first reaction is, wait, what? He sold it to himself? Don't worry, you're not alone. This move is as fascinating as it is confusing, and it's loaded with implications. So let's dive in. What does it mean? Why would he do it? How does it help him? What's the fallout? And what can we learn from this about business, economics, and financial wizardry? Buckle up. This is gonna be a ride. First off, let's break down the basics. Elon Musk bought Twitter back in 2022 for $44 billion, turned it into X, and now, 2.5 years later, he's flipped it to XAI, his AI company, for $33 billion, or $45 billion if you count the $12 billion in debt X still carries. The catch? It's an all-stock deal, meaning no cash changes hands. X shareholders get shares in XAI instead. And XAI, it's now valued at $80 billion, up from $50 billion just a few months ago. So, on paper, Musk's selling one of his companies to another, both of which he controls as the majority stakeholder. It's like moving money from your left pocket to your right, but with a lot more zeros and some seriously high stakes. So what is this all about? Musk himself said, XAI and X's futures are intertwined, end of quote, which gives us a clue. The big idea here seems to be synergy, combining X's massive user base, over 600 million people, with XAI's cutting-edge AI tech, like the Grok chatbot, I'm told is pretty impressive. Imagine this. X generates a ton of real-time data, posts, trends, conversations, and XAI can use that to train its AI models faster and better. In return, XAI can juice up X with smarter features. Think AI-driven content moderation, personalized feeds, or even tools to accelerate human progress. As Musk loves to say, it's a two-way street where both companies could level up. But it's not just about tech, it's about money too. X has been a financial roller coaster since Musk took over. He paid $44 billion, but advertisers bailed after his free speech push led to some messy controversies. By 2023, Fidelity, one of X's investors, valued it at just $12 billion. Ouch. Now, at $33 billion, it's a step up, but still a loss from 2022. Meanwhile, XAI's on fire, raising $6 billion in December 2024 and hitting that $80 billion valuation. This deal lets X shareholders, including big names like Andreessen Horowitz and Sequoia Capital, who also back XAI, swap into a hotter stock. It's a financial reset button, aligning everyone under one roof with a brighter growth story. How does this help Musk? Well, he's playing chess while we are all playing checkers. First, he's consolidating his empire. Excess debt, $12 billion from the 2022 buyout, has been a drag, but XAI's cash flow and resources, like its Colossus supercomputer, could lighten that load. Second, it's a power move in the AI race. Musk wants XAI to rival OpenAI, which he confounded but left. And X's data is a goldmine OpenAI can't touch. Plus, with his new gig in the Trump administration's Department of Government Efficiency, X might get a relevance boost. More users, more data, more wins for XAI. It's Musk tightening his grip on two key pieces of his vision: tech innovation and human connection. Now let's talk controversies, because with Musk, there's always some spice. Critics are screaming, self-dealing. He controls both companies, so who's watching out for the minority shareholders? If XAI overpays for X, or if X is undervalued to prop up XAI, it's a conflict of interest that could spark lawsuits. Regulators might sniff around too, though since both are private companies, they've got more wiggle room than public ones. Then there's the X community. Users are already grumbling about AI bots flooding the platform. If XAI turns X into an AI playground, will it alienate the humans it's supposed to serve? And let's not forget the optics. Musk bought Twitter for $44 billion, ran it into the ground, some say, not me, and now sells it for less to himself. It's bold, but it's messy. Consequences? Short term, X might get a tech upgrade, smarter algorithms, maybe even Grok as your personal X assistant. Long term, if this works, Musk could build a hybrid beast, a social media AI powerhouse that redefines both industries. But if it flops, if XAI can't handle X's debt or users rebel, it could tank both. Investors seem optimistic. XAI's valuation jumped after the news, but the risk is real. And globally, this could push competitors like Meta or Google to double down on their own AI social media match-ups. The race is on. So, what does this teach us about economics and business? Lesson 1. Valuation is a story, not a science. X went from $44 billion to $12 billion to $33 billion. Numbers shift with narrative and momentum. Musk sold a vision of synergy, and investors bought it. Lesson 2. Debt is a double-edged sword. X's $12 billion load forced this deal, but XAI's strength might turn it into an asset. Lesson 3. Control matters. Musk's majority stakes let him pull this off. Most CEOs couldn't. It's a masterclass in leveraging ownership to rewrite the rules. Financially, it's a lesson in creative structuring. All stock deals dodge cash crunches, aligning interests without draining reserves. It's like bartering on a billionaire scale. And in business, it shows timing is everything. Musk struck when XAI was hot and X needed a lifeline. It's also a reminder that innovation isn't cheap or clean. It's chaotic, risky, and sometimes looks like a guy selling himself his own company. What can we learn personally? First, think big and connected. Pairing strengths across ventures can unlock value. Second, don't fear the mess. Controversy didn't stop Musk, and it shouldn't stop you from bold moves. Third, know your leverage, whether it's data, skills, or networks. Use what you got to shift the game. And finally, adapt fast. Musk pivoted X from a sinking ship to an AI rocket. Flexibility wins. So, there you have it. $33 billion, one headline, and a million questions. Is this Musk's genius at work or a gamble that will backfire? Time will tell. For now, it's a front row seat to one of the wildest business moves of 2025. What do you think? Stay curious, folks. This world's never dull with Elon around. Be the salt of the earth.